Hey guys, Akil here. Want to come in and share with you a quick trading idea here on the pound dollar. And this is actually going to be a follow-up from one of the trading ideas that we looked at in the weekend video. If you remember, a lot of pairs were coming down in the structure, and one of those pairs was the pound dollar, right? If we just look at a swing high to swing low right here before we bounce right up, this previous, right, V point right here is going to be a previous level of structure support. As you can see, price action came down into that level of support. And as we go down to a lower time frame, the 1 hour, it gave us a nice simple pattern formation called a double bottom. And a double bottom is pretty much what it sounds like. Price action dives down. We get a little bit of loss of momentum down here. We bounce off that level initially for our first bottom down here. And then we come down to retest it for our second bottom down here, giving us a second rejection. Speaking of rejection, if you remember, we spoke about understanding candlesticks and the value that comes with being able to read them. And if you remember, we spoke about the wicks being important because they show us a sign or tell us a story of rejection. So not only do we have the double bottom down here, but on the double bottom completion candle, which is this green one with the long tail, it shows a sign of bullish rejection. So the double bottom worked out well. We came right back up to the level that we anticipated it going to, which is going to be our inside level of structure right here. It actually came right there on a dime, so it was wiping the brow this morning. But if you are someone who is interested in a secondary opportunity at entering this trade, I'm going to give you a warning afterwards, so just make sure you stay to hear that before you go and jump in involved in this trade. We can have something called a 2618. So the 2618 is essentially a double bottom. That's what the 2 stands for, right? Double bottom, followed by a 618 retracement. You can trade this kind of as is, exactly like this, or your own little unique type of way. So the first thing that we need is we need a break and close above the peak of our double bottom, which if I get my right drawing tool on, it's going to be right here. So as soon as we break and close above that double bottom, it validates it, and that gives us the initial entry or the initial kind of alert for our 2618. Then after that, we want to look for price action to return to our 618 Fibonacci retracement, which is going to start right here. Now, if you're an aggressive 618 trader, you just trade it as soon as it hits there. So limit order, boom, hits filled on the way up. Or you can look at this as being like a reversal zone where your zone of entry starts at the 618. I'm drawing it at the wrong spot there. Let me try it again. Your zone of entry starts at the 618 and goes all the way down to the low of the double bottom. And then if price action enters that zone, then you look for your specific reason for entry before looking for a move up. Now, traditionally with the 2618, you're looking for a move to one of two levels, either a retest of the previous highs, so a move from right here to right there, or a move to the next extension point, Fibonacci extension, swing low to swing high, and back down, and you look for that 127 or 1618 Fibonacci retracement, whichever is your preference. Me personally, I always like to base my targets off of structure, so in this case, I would look for the 1618 because that happens to line up with a previous level of structure. Looking left, structure leaves clues right inside here. And it looks like a 618 Fibonacci retracement as well. Let me just see this right here. Swing low to swing high Fibonacci retracement. Ooh, right below that level as well. So a pretty decent level. With that being said, I'm doing analysis for the first time here. So this isn't pre-recorded or anything like that. I actually see a little level right here below that level, the 134 even handle that I would actually adjust targets down for. So I would actually look for this 134 even handle, playing it a little bit safe right before this level. So if I were looking to involve myself in the 2618, that's the levels that I would look to target. However, personally, I am not looking to take the 2618 trade, right? I am completely out of this trade, so completely flat. And the reason for that is because I just don't have the expectation that price is likely to travel to those higher levels. It doesn't mean that it can't. It just means that when I do my top-down analysis, right, from the daily on, I don't see any reason to project that the pound dollar is going to continue bullish in any type of long-term way, right? We've been in consolidation for the last year now, and you can see even recently what we've done is we've gone up, we've gone kind of 3/4 of the way down, then we've gone 3/4 of the way back up, then 3/4 of the way back down, then 3/4 of the way back up. There's nothing here on the price chart that says, hey, from this current level, we're likely to continue all the way back up or all the way back down. We just don't know. And that is going to be the brilliance of doing top-down analysis. Like I always say, that IPDE, it sets up your trade. It gives you the right perspective. It allows you to be in a position where you know that, hey, I can shoot for bigger targets because there is a likelihood that price may travel in this particular trade, or, hey, I got to shoot for smaller targets because I don't really know. And in this particular case, I decided to be a counter trend trader, meaning that I'm looking for a quick in, a quick out, get my money, and wait for the next opportunity. Now, again, that's just my analysis. If your analysis does say that, hey, I think we're likely to continue. Oops, sorry, I keep grabbing the wrong tools, guys. Likely to continue here, likely to go a little higher up here, then hey, go for it. Nothing's going to stop you. Or if you wanted to do one target at the initial target and then add a secondary target, meaning take half your position off here and then take a second half of your position off here, that's fine as well. Just giving my perspective. Anyway, I'm rambling, just wanted to share this with you because I thought it was a cool follow-up to one of the trading ideas from this week's Trading Edge video. If you have any questions or comments, leave them below. Hit that like button, support what I'm doing, and I'll see you guys with the next video. See ya!